Neil, I want to welcome you. Thank you for making the time to have a conversation with me. I first learned about your book when I heard your interview on the Build Wealth Canada podcast with Connell. And later you were on another podcast with Tom Karadza, Rockstar. So Rockstar is a group that I'm part of. And I think after those podcasts, I went and I got your book.
Thank you.
Very interesting read. I read it. And I think it's a book that every Canadian should get. I love the fact that you use the story format to share your story and to share your knowledge about the Canadian tax system. And so what I want to do today is just to go through, dive into the book, have some discussions so that our listeners can get some appreciation of the Canadian tax system and maybe learn a few things today from our conversation.
Sure.
So why don't we start by you letting our listeners know a little bit about you? How did you get into this profession in the first place? And sometimes I just wonder, how come you didn't know that the tax system was going to be this complex? Perhaps you probably didn't know what you're getting into. So why don't you share that story?
Yeah, I had no idea what I was getting into. But I was in university and undergrad and business school, and in third and fourth year, you don't have to, but most people choose a specialization, marketing or finance or accounting. And the majority of people chose accounting, and I was debating, I didn't know, and I just did it. I did accounting because that's what most people were doing. And everyone told me, yeah, do accounting, whatever. So I just did it and I fell into it. And I worked in small accounting firms. I got my CA designation. And then I started my own practice like 8 years ago. And once I really started to understand how it all works, how this whole system works, I became very frustrated because, I mean, in our business, like you know yourself, we have to be contacting CRA every day. And like, that's not fun, right? That could be frustrating. And then seeing the tax situations that people get themselves into. And I'm not even talking about, high net worth individuals that might, they have very complicated tax situations. Just normal people who have their parents who are elderly senior citizens who are getting audited for their medical expenses, who have like $40,000 or $50,000 of income, and the CRA every year is auditing their medical expenses. Like, it's so ridiculous. So once I started to see all of the complexity and bureaucracy in our tax system, it really frustrated me. And I didn't know what to do about it. And I just kept complaining about it to my wife. Every day after work, I would complain to her. And she said, after a while, I can't listen to this anymore. But she said, why don't you write a blog or write some articles about it or something and put it on a blog and see that, if people want to hear it. So I started to write all these stories that were happening to me just throughout the day. And then I realized, whoa, there's a whole book here. This isn't just a blog, right? You could write a whole book about this. And there have been other books written in Canada about taxes, right? There's other books out there, but I didn't really see any book quite like this, where it's like ideas on how to simplify the tax system. And from the perspective of an accountant who's working in it, right? Like right now. So I thought that I decided, you know what, I'm going to write a book. And The Grumpy Accountant, that title, there's a long story of how that title came to be. So I know we don't have that much time, but that's how The Grumpy Accountant came to be. It's a true story, right? It's based on true events. And that's how it came to be. And the book is written, like you said, as a story, like The Wealthy Barber. And I reached out to the author of The Wealthy Barber, David Chilton, and he gave me his blessing to write my book in the same format as his. And he gave me the idea to put tax tips at the end of every chapter. People would actually have a reason to read the book. They'll learn something from it. So that's why there's 29 tax tips in the book as well.
That's right. And I think that was a really, really great idea to include those tips because I found them very useful. So for me, one of the things I learned, just in the first few chapters of the book, was about our Canadian tax history. And I didn't realize how simplistic our tax was initially when it was formed. Um, and I know today you're known all over Canada as someone that is very frustrated with our complex Canadian tax system. So why don't you share a little bit about the history for our viewers so that they can understand how we got to the place where we are today?
So from 1867, right, which was Confederation, so from 1867 to 1917, there was no income tax in Canada, at least no federal income tax. Some of the provinces might have had a small income tax, but federally there was no income tax. And the federal government collected its revenue from basically tariffs and, different forms of sales taxes and duties and fees and things like that. But there was no income tax. In the United States, their income tax only started in 1913. Okay, at the end of 1913, that's when the US income tax came into play. And then World War I started in 1914. So in Canada in 1917, they came out with what was called the Income War Measures Act. And this was an income tax that was, there's some debate historically whether this was supposed to actually just be temporary, just to pay off the debts from World War I. So World War I ended, I think, 1918, and we still have the income tax today. It's over 100 years later. But a lot of historians say, well, really, it was supposed to be temporary. And there were debates in Parliament at that time, 1918, 1919, whether they should eliminate the income tax because the war was over. And of course, we still have the income tax today. And what's funny is in 1917, when they first brought in the Income Tax Act, like the legislation, Income War Measures Act, it was 11 pages long and you could read it in 20 minutes, right? That was it. Today, the Income Tax Act is over 3,000 pages. There's over 1 million words. Like nobody can really read it. And I mean, it would take you months and months and months to read the whole thing.
Yeah, and that's
right?
crazy. And I have,
Oh, look at that.
and that is the books. That's how big it is.
It's bigger than
and
the
you're right, it's over 3,000. And if you look at the text,
it's bigger than the Bible. It's bigger than the Bible. Yeah, look at it. It's nuts. I mean, and you need other textbooks just to help you interpret that income tax.
That's right. That's right.
So in 1967, there was something called the Carter Commission. And this was the last time in Canada from 1967. That's when the Carter Commission came out with a report that was suggested a whole bunch of tax reforms. And that report actually took 5 years. They did a comprehensive full review of the Canadian tax system in the 1960s. And that's why in 1971, there were a lot of tax changes. Like that's when we first had capital gains tax in Canada, 1971. That was one of the recommendations of the Carter Commission. There was also a recommendation of the Carter Commission, which they didn't follow, which was to actually tax the family unit as opposed to individuals. So like right now, if you're married, right, each spouse has to file their own tax return and they can't really share their income. I mean, there are strategies that are complicated to kind of like to do that. But typically speaking, each spouse has individual income, individual tax filing. Whereas other countries, like in France, for example, in France, they actually tax the family unit. And in the United States, there's like joint filing for married couples. In certain cases, like we don't really have that in Canada. So, but what makes it complicated, of course, is some tax deductions and credits you can share between spouses. So it basically, since 1967, our tax system, no government since 1967 has had the courage or the bravery to do a full review of our tax system. And what we've done instead was little tinkering. So I heard someone say there's another guy in the tax industry, Joseph Devaney, and he explains an analogy. Imagine you have an old truck, and the truck is it's 50 years old, and you still want to drive it. So you don't want to buy a new truck, but you have this old truck. So what do? You paint it and you add to it and you take out part of the engine, you put a new part in here and you tinker and tinker. And for 100 years, you keep tinkering with the same old truck and they're just doing Band-Aid solutions. That's basically our tax system. It's like this 100-year-old complete mess. It's so complicated and it causes so much frustration and stress and bureaucracy. The CRA's budget now is over $5 billion every year. And it didn't used to be like that. Like even maybe 5 or maybe 10 years ago, it was half that. So the budget has really increased a lot. We have over 40,000 employees who work for CRA, over 44,000, whereas the IRS has 80,000. But the United States is 10 times the population of Canada. So they're running their tax system with double the amount of employees, not 10 times the amount of employees, right?
That's right.
So now in the United States, you have states also that have their own tax authorities. So it's not a perfect like comparison, but it just shows you like something is off. And Canadians spend $7 billion a year to pay people like us to help them file their tax returns. And that doesn't include corporations, business. So that's just individual income tax. So we're spending too much time, too much money, too much stress dealing with what should be a very simple task that actually most people shouldn't even have to do at all. And we could get into that. But yeah, it's just historically, it's just all we've done is tinkering on the side. And what I call for in the book is we need to do a massive, comprehensive, full review of the entire tax system from top to bottom. And even if it takes 2, 3, 4, 5, 6 years, it'll be worth it. And there has to be a government in power that cares about this issue and wants to do this in a way that's actually like non-partisan and non-political, and to get people from across the country to give input, like accountants and tax lawyers and small business owners and self-employed individuals and just normal taxpayers, like to how to make this better.
And I think that's a good point. I think one of the crazy things that I find as a tax practitioner is just the complexity of our tax system. And I think that should lead us now to the conversation about your reforms or some of the things you're proposing to simplify the tax system. And when I read a book, even when I listened to some of your podcasts, as a tax practitioner, as someone making a living from filing other people's taxes, some of your proposals are essentially saying, well, I'm going to be left without a job. And so sometimes I even wonder, do you have friends that are still CPAs working in this profession? What kind of conversations have you been having with other professionals in our profession? Because I think some of your measures are, I don't know if I'll go as far as saying they seem to be offensive, but I mean, they're really true. They need to be the right reform. So why don't you share some of those ideas?
Yeah, sure.
Maybe we can talk a little bit about them.
Sure. Yeah. Basically, I am trying to write us out of a job. Like we shouldn't. That's right. We shouldn't. The idea of like a tax accountant, that the tax system is so complicated, people need a professional to help them file. It's absurd. Like when you think about it, we should make it simple enough that people shouldn't need us to help them file their tax returns, right? So I compare it, like imagine if you went to the grocery store, okay? And when you get the grocery bill, you go to the cashier and they cash you out and here's your grocery bill. And then they say, instead of them giving you grocery bill, imagine they say, okay, you have to calculate the bill and here's a 3,000 page book that will help you calculate the bill because there's all these deductions and credits you can claim to lower your grocery bill.
Yeah.
Okay. And anytime in the past you have to keep all your receipts for the past 6 years. And anytime in the next 10 years, the Canada Grocery Revenue Agency can send you a reassessment from a previous tax return, previous grocery bill return, and you need to hire for $500 a year. You have to hire a grocery bill professional. I mean, you'd be like, what? This is crazy. We don't want to pay our grocery bills like this. But for some reason, we accept this with our tax bill. It's very strange. So some of the reforms I propose, so sorry, your question, what do other accountants say? I've received feedback that most accountants recognize, like it's too complicated. And they might think that some of my ideas, maybe they go a bit too far, right? Which is fine. Like people can disagree. That's okay. I don't mind. But generally speaking, I think that even if we change the tax system exactly at how I want it to be, accountants would still exist because we do a lot of other things other than tax, right? Small business owners, anyone who's self-employed and owns a small business, even if they didn't have to file a tax return, let's say, well, they might still need our help just to be able to help them track their revenue and expenses and see if they're profitable and how to help them with their personal finances. I think there'd still be a role for people like us. But yeah, the idea that like 28 million Canadians, right? Because if there's 37 million Canadians and you exclude children, So like there's about 28, 29 million tax returns that are filed every year, individual.
Okay.
Like the idea that 29, 28, 29 million Canadians have to file a tax return, it's crazy. I mean, it's like, it's so ridiculous. So what other countries do, this gets into like, what are my actual ideas to
Yeah.
simplify it? I would, in terms of simplification, I would look at two different types of people. One is individual taxpayers who are employees, T4 employees.
Yeah.
And the second category is self-employed, whether incorporated or sole proprietor, anyone who has a business.
Yeah.
So for T4 employees, I talk about this in the book, any employee with a T4 slip that has no other source of income, no self-employment income, they should not have to file a tax return. It's ridiculous. The T4, which your employer already sends to CRA,
Yeah.
that should be the tax return. If the CRA already has your T4, so why do you have to take your T4, put it into a T1 tax return, and then file that to CRA? It's ridiculous.
Yeah.
And if you make a mistake, what's so funny is if you make a mistake in putting your T4 into your tax return, the CRA will automatically fix it for you. They have a matching program and it's automatic. They will automatically send you a reassessment with like, we have corrected your tax return to match the T4 we already have on file. Well, if you have it on file, why do I have to file it to you? You already have it. It's so stupid. So the reason why people have to still file is because you have all these deductions and credits. And there's over 100, there's like over 120 or 130 tax deductions and tax credits that have messed up our tax system. So my idea is eliminate every single tax deduction, tax credit, abolish it all, every single one, okay? And your tax return should be like, this could be the size of your tax, one little slip, that could be your whole tax return, or really your employer already, and other countries have this kind of system for employees. The United Kingdom, Israel, a lot of European countries have a system where if you're an employee and you get your T4 slip, that's it. You're done. You don't have to file anything. If you want to file, because maybe you can claim like something, you could go right onto the government website, do it. It's very easy. You do it yourself and you could file like for a refund. If there's, there are still a few deductions and credits, but for the most part, most people who are employees should not have to file a tax return. And if we eliminated every single tax deduction and credit, we could lower the tax rates, right? To make up the difference. So it's really a revenue neutral plan from the government's perspective. The government doesn't have to lose money on this revenue, right? It could still be, they collect the same amount of revenue. Instead of deductions and credits, we would just have lower tax rates. And that could even attract more hardworking people to come to Canada. Like if we have a lot of people leaving Canada every year because they go to certain states in the US where there's no state income tax.
That's right.
And that happens a lot. So I think you basically eliminate every deduction credit and then you lower the tax rate to make up the difference. And then T4 employees, which is the majority of tax filers, most people shouldn't even have to file. The only other thing is if you have investment income, there are ways of dealing with that in a simple way. And capital gains, maybe, okay, if you have capital gains, you have to report it, you have to self-report it, then you would have to file. But still, it could be a one-page. There's no reason why a tax return should be longer than this, right? And our tax returns now, when you print a client's tax return to a PDF file, it could be 20, 30, 40, 50 pages.
Yeah.
It's crazy. Yeah.
That's crazy. And I like that idea. I was not even aware that a lot of other countries have a very simplified tax system. I mean, I immigrated from Nigeria and I did work in Nigeria for a number of years. Even though Nigeria is regarded as a developing country, I never had to file a tax return.
Really?
And I never had to file a tax return.
Wow.
Even up to today, nobody files. I don't know if anyone files a tax return, except corporations. I mean, businesses will file.
Right, that makes sense. So yeah, because then it's easier on every individual. That's right. Yeah.
That's right. As employees, we never had to file.
Wow.
And so, what will it take then for the government to change this? Why is the government so reluctant? Why are they not willing to simplify our tax system?
So it's all about politics, and each party, like the liberals and conservatives, are both guilty of this because they love tax credits and deductions, because what they're able to do is target their favorite group of voters. Okay, so the Stephen Harper conservatives did this. They created so many tax credits. the child fitness tax credit, the child arts tax credit, the public transit tax credit. There is something called the family tax cut, which was kind of like an income splitting tax credit. There were a home renovation tax credit,
That's right.
and
I
there were
remember
a whole
this.
bunch more. And they did this like, okay, on the one hand, I kind of like it because it does lower people's tax bills. Okay, fine.
Yeah.
But if you want to lower people's tax bills, forget about these tax credits, just lower the
The
tax rate.
rates. That's right.
And then that applies to everyone, because a lot of these tax credits only help people who can afford to pay for a home renovation. Then they get the tax credit. So you're helping people who may not even really need the help.
That's right.
So, and then the liberals did the same thing. So the liberals come into power, they eliminate every tax credit that Harper put in, but then they put in their own tax credits. So they have a tax credit for school supplies for teachers, and they have a climate action tax credit, and they have all these other tax credits. So my point is, like, the reason why this hasn't changed is because politicians love these little tax credits and deductions because they're able to target groups of voters in an election campaign. It sounds very good. And they, both parties do this, and they've done it. And the other thing is, like, to try and really do a comprehensive review of the entire tax system, it would require years. Like, it needs to have like a commission, like a member of parliament. They have to create a committee and have a real commission, real study on it, really take a couple of years, a few years. It will cost money and time. But I think more people are recognizing it. I actually just spoke to a member of parliament yesterday from Manitoba. He's in opposition right now, conservative MP, but this actually is on, he really loves my book, and he told a whole bunch of his colleagues and members of parliament to read the book. And I spoke to another MP about it, and they actually, this issue is important to some of the MPs. And their hope, like, they want to do something about it, and they're talking about it, and he might raise it with the finance committee of parliament. And so I think if there's an election, people are saying there might be an election this fall. This current government, like, I reached out to the Minister of Finance, Freeland, and I reached out to the finance critic of each party, the NDP, the Green Party, and the Conservative. And most of them didn't answer me. But if there is an election this fall, if there's a change in government, I think that eventually something has to be done. Because when we look at other countries compared to the Canadian tax system, our system is a mess. There's so much room for improvement. And apparently, I was speaking to a different member of parliament who told me the biggest question, the most questions that members of parliament get from their constituents are issues with CRA, the poor service at CRA. That's the number one issue that people call into their MPs about. Like, I have this issue with CRA, I don't know what to do. So something has to be done here. It just will take political will. So what I write in my book is that I place the blame. The CRA is not to blame. It's not their fault. They're just implementing the law. They have no power. It's the ministry. It's called the Department of Finance of the federal government. So it's really the Prime Minister and the Minister of Finance. They set the legislative agenda. And what we need is a change in legislation, and that has to come from the Prime Minister, Minister of Finance, and Cabinet. So I actually blame every Prime Minister, Minister of Finance of the past 50 years. That's where the blame lies.
I think that's an interesting point. So one other thing I want to talk about, I think I found interesting in your book, you talk about refund. And you talk about this idea of refund as a potential scam by the government. And I know a lot of taxpayers love their refund. They're excited. And sometimes as a tax practitioner, as a tax preparer, sometimes I feel guilty when I prepare a tax return and there's no refund for the client. And I got to now go into this explanation, try to explain to them the reason why they're not getting a refund. So why don't you share a little bit about your idea? What do you think about refund, and what should Canadian taxpayers be doing instead of waiting for their refund every year?
Yeah. So what's so funny about tax refunds, it just proves how it's like the evil genius of the government, because what they did was, with tax refunds, they made everyone look forward to filing their tax return. Look, you're getting money back. So it was a way to kind of trick people, because if people didn't get a tax refund, people wouldn't want to file their tax returns, right? They
Right.
wouldn't care as much. They would delay it. They wouldn't care. So a tax refund means really too much income tax was deducted from your pay, from each paycheck throughout the year. Your employer deducts income tax from every single paycheck,
That's
CPP,
right.
EI, income tax, right? If you're getting a refund at the end of the year, it means, well, they deducted too much and they gave it to the CRA, and now you're getting it back. And you're getting it back because you have deductions and credits that you're allowed to claim on your tax return that lowers your tax bill, but your employer doesn't know what deductions and credits you're going to claim at the end of the year on your tax return. So they have to deduct the standard amount of income tax.
Yeah.
And then you wait until the end of the year to get back your refund in one shot. But really, your paycheck should have been higher every single 2 weeks or every single pay period.
That's right.
So my pet peeve, like the problem with these tax refunds is that if you feel like a lot of Canadians, I think it's something like 50% of Canadians are living paycheck to paycheck. Well, these paychecks should be a little higher throughout the year.
That's right.
And then when you get the refund at the end of the year, oh, I got a $3,000 tax refund, or I got a $1,000, people take that and they just go and spend it, right?
That's true.
And it's like, oh, no, you should be saving it, put it in your TFSA, or right, like there's other things you can do with it. But what I think is that there are ways you could actually tell your employer to deduct less income tax from your pay from each paycheck. If you're entitled to receive like the disability tax credit or any of those major tax credits or deductions, there's a form you could file at the start of the year, and you send that to CRA and they approve it. I think it's called the T1213 form or something. It's one of the tax tips in my book. And this is a form that you could actually request that the CRA approves that your employer can deduct less income tax. And that way you won't get as big a refund at the end of the year, but you get a higher paycheck every 2 weeks. So it really depends on the person. I've told all my clients this, and some people say, you know what, I'd rather just get the refund at the end of the year. Because I don't want to like worry about, oh, maybe I'm going to owe tax if they took off too little income tax. So some people would rather just get the refund. It's up to the individual to decide. But most people don't know this. So people should know that if you get a big refund every single year, and you don't want to wait to the end of the year, you'd rather your paycheck to be higher every 2 weeks or every pay period.
Yeah.
There is a way that you can actually request that your employer deduct less income tax throughout the year. And that way, at the end of the year, you won't get a refund, but you get more throughout the year, right? So your cash flow is better throughout the year. And because of time value of money, right? Money is worth more now than it is a year from now. Because if you have it now, you could pay off debt and save on interest, or you could invest it and earn investment income. So if you have a choice between getting $5,000 a year from now or $5,000 today, you choose today, right? You want the money now rather than later. So that's the idea of like people who get large refunds every single year should really reconsider that and look into this.
And I think that's an important point. A lot of people don't realize that, and sometimes they end up blaming the poor tax preparers for not giving them high refunds. They don't realize that we don't generate those refunds. But again, that's an important point you just mentioned. So for those that are listening, the money is better in your pockets than in CRA's hands, because CRA they don't pay interest on this money, right? So they hold it for the entire year and give you this lump sum when you file your tax return, and then that's when you have access to that money.
Yeah. It's like you're giving a loan to the government, interest-free.
Interest-free, that's
and
true.
It's like, why would anyone do that? You want to loan the government money interest-free? That's crazy.
That's true.
Yeah.
So what I want to talk about now is, I think in your book, you talk about eliminating the RRSPs, TFSAs, RESP, a lot of these vehicles that most Canadians use as their only way to save on taxes. And so what would you say to Canadians? Why do you think that is a good idea for Canadian taxpayers to entertain in your proposal for as part of the reform of our tax system?
Right. So my issue with TFSA, RRSP, RESP, RDSP, RIFs, it's just that it's gotten out of hand. meaning the government wants to encourage people to save money, right? So they
That's
came
right.
out with the RSPs like maybe 50 or 60 years ago. They came out with TFSA in 2009. I'm not sure how old the RESP is. The RDSP is fairly new when they came out with the disability tax credit, maybe 10, 20 years ago. I'm not exactly sure. RSPs get converted to RIF. My problem with all of this is that it's too complicated. So the intention of the government, I agree with it. It's well intentioned. People should save money. You should
That's right.
always try and save money, even tiny amounts. Even if you can only save $50 a month, that adds up over time, right? Like
Yep.
even so, I agree with the intention of trying to encourage people and incentivize and motivate people to save money for their future.
Yep.
I love that idea, right? But for me, the idea is, okay, how are you doing that? You're creating all these problems for people. RSP, TFSA, RSP, they're very complicated. People don't understand. A lot of people fail to understand how they work, and they over contribute. Then they get penalties and interest. They don't understand the rules. They withdraw money from the TFSA, then they put it back in, and they get a penalty. They don't understand. If you withdraw and you want to put it back in and you're already maxed out, you have to wait until January 1st the next year. There's all these, it's too complicated. And I've seen so many mistakes that are made. I once saw an old lady, 91 years old, at their bank. They put money into her RSP. I'm like, what? You can't do after 71, you can't contribute to your RSP. And it took years to fix it, to clean it up. So I'm just saying it's so complicated. If the government wants people to save money, why not simply just lower the tax rate dramatically, or maybe lower the tax rate on certain types of investment income, or eliminate, let's say every Canadian can earn up to $40,000 of investment income every year tax-free. That's very simple, because then that allows every Canadian, you can save $1 million. I could save $1 million. If I have $1 million saved up, I won't pay tax, 4%, $1 million, $40,000, whatever. Just make up a number like that. And just keep it simple. So what I kind of propose in the book is like, instead of all these different accounts, maybe just have one account, call it the CSA, Canada Savings Account, one account. So no RSP, TFSA, RESP, RD, just have one account, and maybe just have a lifetime contribution limit. Because right now we have these annual contribution limits.
That's right.
And people have no idea what their contribution limit is. They have to look it up. They have to call CRA, spend 3 hours on hold. The CRA doesn't have the updated contribution limits because they only have information from a year before. People over contribute. So why not just have a lifetime contribution limit, $1 million or $2 million per a family or something. And then like most people, you're not even going to, you're not going to go over. There won't be penalties. Right. So I'm just saying it has to be kept, it has to be made simpler, right? It's people don't understand RSP. You have to do a whole calculation. Well, what tax bracket am I in right now? What tax bracket will I be in retirement? You have no idea what tax bracket you'll be in retirement. Maybe you'll never retire. Maybe you'll like working and you're not going to want to retire. So maybe like, you don't know. And maybe right now you're in a lower bracket, but maybe the RSP is still beneficial. So every Canadian needs to like hire so much professional help to figure out, okay, what's better, TFSA, RSP? I don't know. What if I put in the RESP for my kids' college, university, and they don't go to college, university? Well, now what? So it's like, I mean, it's just become too complicated. And I think the philosophy behind TFSA, RSP, RESP, like RSP, you have the home buyers plan where you could take out money if you're a first-time home buyer. I think it's just the government is micromanaging our lives way too much. So like every little life event has some sort of tax implication. College, university, there's tuition credits, there's RESP. You buy a home for the first time, we have a first-time home buyers tax credit, and we have the home buyers plan and the RSP. So like, I guess my point is that the government has this it's a very paternalistic view of government. That government is like the mommy and daddy, and we adults are like little children, and it's micromanaging. And what happens when we do that, if people want that, then that's fine, if that's what the voters want. But the downside, the side effect of that, the unintended consequence is that you have all this complexity and bureaucracy, right? So if people were just taught, what we need to do is in the education system from a very young age, starting in kindergarten, we have to teach every year. There should be a course on personal finance where we teach children about saving money, right? And here's how you do it. And here's compound interest. Here's how it works. Try not to get into debt, right? Like here's, we have to have personal finance. And I know some provinces have added this into the curriculum. I know the Ontario government is adding personal finance into the curriculum now.
Oh,
I
interesting.
think, yeah, they've started to add it in, but I think it needs to be done on a wide scale. Every single school in the country, teach
Yeah.
kids about this. And then maybe we wouldn't need, and parents have to learn about this also and teach it to their kids. And then maybe we wouldn't need, actually, there's a book here. Another accountant turned author, Robin Taub,
Or the
she
wisest
wrote
investment.
The
Okay.
Wisest Investment. And this is about teaching your kids about money, basically.
Oh,
And it's a
interesting.
great read. So parents should read this book. Because it's really a great read. It gives you strategies on how to teach your children about saving money and personal finance and the value of a dollar. But I don't like the idea of the government with all these different TFSA, RSP, RESP. It's just too much. It's gotten out of hand. It's so complicated. And also families, like each spouse has their own RSP, their own TFSA. Like it's just too complicated. And I want simple, right? So it's well-intentioned, but it's not well executed. That's what I'm trying. That's my point.
Right.
Yeah.
And in addition to all of these different vehicles that the government has created, they make it even more complicated if you over contribute. I know one of the biggest things or the worst thing I hate to do is to deal with an RSP over contribution. It's so complex. I remember we just did one recently.
It's crazy.
A client that over contributed for like, I think 2-3 years in a row. It was just such a mess. To get, there's so much forms you have to fill. You have to get all the different statements. You have to know how much over contribution you did per month. It's just complex. And so that's crazy.
And by the way, to add to this complexity, we also have CPP, Canada Pension Plan, OAS, Old Age Security, GIS, Guaranteed Income Supplement. So you just have like all these different, and we have Canada Child Benefit, and we have GST credits. So we just have like, and then every province has their own credits and their own things. So we just have like too many different programs and too many different departments, CRA, Service Canada, right? Like, and it's become too much. Like, do we really need a GST credit and a Canada Child Benefit and a Guaranteed Income Supplement and Old Age Security? This is all from the federal government. It's like, hold on, why don't we just combine this into one, just make it simpler? So I just think there's too much complexity and bureaucracy in the system. And I know that most Canadians feel this way because they have to navigate it. And I know a lot of accountants like you, and we deal with this, and it's just gotten out of hand.
That's right. I know. Yeah, retirement planning is now another issue that retirees have to deal with. Looking for people to help and professionals to employ to help in that regard. So I know it's going to take some time. I don't know if the government will ever get to these reforms or to these changes. But now, as Canadians, we have to deal with what we have. So one of the things I talk about all the time is this idea that taxes is probably the biggest expense that we have as individuals. I know some people probably don't see it or don't even know because we pay income taxes, we pay sales taxes, there's property taxes, there's gas tax, there's all these taxes and layers of taxes we pay all the time. So what do you think? I mean, do you agree that taxes is our biggest expense? I personally think is one of the biggest obstacles to building wealth. And so if you agree, maybe share your insights on that, and maybe share maybe 3 or 5 things you think the average Canadian taxpayer can do to lower their income tax bill and to get ahead financially.
So I think taxes, probably aside from the cost of housing, I think taxes are probably the biggest expense of any household, because exactly like you said, your income tax, if you look at income tax and then sales tax, every time you purchase, most things have sales tax, and you fill up gas, 1/3 of the price of gas that we pay at the pump is actually taxes.
Oh, wow.
Anywhere from 33 to 50%, depending on the price.
Wow, I didn't even know it was that high. That's
crazy. It's I think it's more than 1/3. The Canadian Taxpayers Federation puts out a report every year called Gas Tax Honesty Day. And they also charge GST, HST on top of the tax. So
Oh,
they're
wow.
charging tax on tax. It's a sales tax on the gas taxes. Like,
Wow.
so it's pretty crazy. Yeah. So, and property tax, if you own your house or a condo, and even if you're renting, where does your rent go? It goes to the landlord who pays property tax, right? So
That's right.
rent is basically you're still paying property tax in a way, right? Indirectly.
That's right.
So yeah, like I think definitely I think taxation is probably the number one or number two expense of any household. Number one's probably housing, and number two is probably tax.
Yeah.
So I would definitely agree with you. I think in terms of ways the average Canadian could minimize their tax bills and try to build wealth. First of all, if you're self-employed or a small business owner, definitely you have to speak to a tax advisor, because there are strategies and ways, whether it's incorporation, there's all sorts of ways that self-employed people, small business owners can minimize their tax bills over time. So definitely have to speak to a competent tax advisor. Don't try and do it yourself.
Mm-hmm.
Now, for the just individual average Canadians, I think one of the best things people can do is max out their TFSA every year. And for also many Canadians, RSPs. I know just in the previous, just a few minutes ago, I was railing against TFSAs and RSPs, but what I was railing against is the complexity in the system.
That's right.
But in terms of building wealth and tax minimization, I think using these registered investment accounts is so important. TFSA, absolutely no brainer. Everyone should be trying to max out their TFSA every year. Remember, both spouses can have a TFSA. One spouse can just give money to the other spouse and put in their TFSA.
Right.
And you can open a TFSA right when you're 19 years old. Some provinces is 18, some it's 19, I forget. And so TFSA is very important. And your children also, once they turn 18, 19, you could give them money if you're a generous parent, and put it in their TFSA for them and teach them about it. So definitely TFSA, RSP. Another thing is, every year when you file your tax return, you don't want to miss out on deductions or credits. I hate all these deductions and credits because that's what makes it so complicated. But if they're there, we have to use them to minimize our tax bill. So, and it's very hard every year to keep track because they're constantly changing.
That's right. That's right.
They're always changing. Every time there's a change in government, the tax credits and deductions change. So every year the budget, and sometimes it's very confusing because they'll make an announcement, we're going to add a new tax credit, but then it never gets passed into legislation, never gets passed into law. So it could be very confusing. So I think what people should do when they file your tax returns, double check, triple check. If you're filing on your own and you're using TurboTax or something, I don't know if that, honestly, maybe it's worth it to pay the few $100s every year to use a professional tax preparer who's on top of and keeping track of the tax deductions and credits. I've seen people come to me from H&R Block and they had mistakes in their tax returns. Like they completely missed a lot of things. So you want to make sure you have someone good on your side that has the same goal as you to minimize your tax bill. I think that's very important. I would also say, like, just by filing your tax returns on time every year, especially for small business owners and self-employed people, you avoid penalties and interest. And if you're getting refunds, you get your refunds sooner. So don't file late and incur penalties and interest. I hate when people have to pay penalties and interest to CRA. So especially if you're self-employed and you have to make tax installments, HST installments, you're a small business owner, and you're making corporate income tax installments, and you're making payroll tax source deductions every month for your own salary or employees' salaries, and they slap a 10% penalty on you if you're late on those payments. It's horrible. So really make sure that you have a system in place where all your tax payments and all your filings you have in your Google Calendar or whatever calendar system you use, you set up automatic reminders, right? And so I think that's important. I also think that self-employed people, small business owners, should be setting aside money. Set aside your HST that you collect. Set aside some for income tax. So at the end of the year, or when you make installments, you always have it on hand. You're not falling behind.
That's right.
And I know that's a big pitfall that a lot of people fall into, where they forget to set aside money for tax if they're self-employed. But for the average person, I think it's very important. Max your TFSA. Consider RSPs as well, especially for people who are in the higher income bracket. The RSP is worth it, honestly. And RESP for your kids. If you have kids, RESP, making sure you're getting Canada Child benefits if you're
That's
entitled
right.
to them, right? But I think those are the main things. I don't know. Is there anything else that you could think of? Maybe I'm missing, or
Yeah, I mean, for individuals, it's sort of challenging, particularly if you're a T1 employee, right?
yeah,
If you're an employee, your options are really, really limited.
yeah,
The only thing I encourage employees to do is, if you have a passion, start a business. And then if you run a business on the side, then you may have opportunities where you can, some of the things you do and you pay with after tax dollars, you may have the opportunity to convert those to before tax dollars.
right,
And so otherwise, if you're an employee, it's just the options you have are quite limited.
right,
And so that's why I totally agree with you in terms of maximizing your TFSAs and RRSPs.
yeah,
I know some people think, I know a couple of people don't like anything that has to do with government. So that's why some people don't contribute to their RSPs or TFSAs. For
mm,
some reason, they think the government will have their hands in it. Uh, but those tools are really good if you're an
yeah.
individual
Yeah. The other
planning.
thing I just thought of also, let's say your TFSA and RSP is already maxed out every year and you're in a good position. You could still have investments in what we call a non-registered account,
That's right.
right?
Yeah,
Outside your TFSA RSP, even though there's tax every year, dividend income is taxed very favorably because of the dividend tax credit. So,
that's right.
like if somebody has a non-registered investment account and they earn dividend income, that's not the end of the world. You'll still have a
That's right.
favorable, you have a much better tax rate on dividends than you do
That's
on
right.
interest income, right? So there's little things like that also. Um,
That's right.
and some people like to invest in rental properties, and there's all sorts of capital gains are taxed favorably,
That's
right?
right.
Only half of
That's
the
right.
gain is taxable. So there's things you could do there. But yeah, generally speaking, make use of all these deductions and credits that are available. Make use of TFSA, RSP, RESP. Take
Yeah.
advantage of it. And while it's still there, until my simplification ideas get implemented. And
That's interesting. Let's just talk briefly about business owners. I know there are some. I think there are certain things about the tax system that you personally don't like about for business owners. And so for business owners, what are those complexities you see in our tax system that can potentially be frustrating for business owners? And what do you think business owners can do to get past those?
well, I just think it's the complexity and the bureaucracy. So most business owners feel a need to incorporate a corporation, right? And run their business through the corporation for legal reasons,
Yeah,
liability, right? They don't want, so they do it for legal reasons. But then from a tax perspective, the corporation has to file its own tax return,
that's right.
right? And then if you want to take money out of the corporation because you want to pay yourself, well, now you become an employee of the corporation, or you could get a dividend.
That's right.
But either way, if you get a salary from your corporation is your employer. You are the employee. Your corporation has to withhold CPP and income tax from your own pay and pay it to the CRA, file a T4 for you. You still have to file your personal tax return and the corporate tax return and the T4. You have to pay the corporate income tax. You have to pay the payroll tax. And then you still have to file an HST return and pay the HST.
Oh, wow.
So we
Yeah.
have personal tax return, T4, HST return, corporate tax return. You have corporate income tax payments and installments, HST installments, payroll source deductions. Maybe you still have personal income tax payable. So it's just like, what? This is crazy. Like the amount of hours and accounting
That's
fees,
right. That's right.
stress, and the amount of time spent dealing with this. It's like there has to be a way. And I talk about in the book how we can simplify this even for a small business owner. And I give the example in the United States, they have something called there's something called an S corp in the
Oh, yeah.
United States
Yeah.
taxation. And what it is, from a legal perspective, it's a separate legal entity that protects you as a small business owner, right, for legal purposes.
Yeah.
But the tax return, there's no separate tax return. It's included in your personal income tax return. So it's one tax return, and your income, whatever profit there is in that business, just automatically flows through into your personal income, and you pay the personal income tax on it.
Just like a employed person would do without a corporation, I guess.
Exactly. So what I'm saying is, let's find, first of all, the fact that an incorporated small business owner like Ontario, the tax rate's 12.2%, right? On the first 500,000 of profit. So we have that low small business tax rate. And the
Yeah,
personal income tax rates are so high. Like you
that's
get
right.
into 53% once you hit, 220,000. So what we have to do, we have to fix the tax rates, the personal income tax rates.
Yeah,
We have to allow an option for a small business owner who wants legal liability protection to have some sort of legal entity that's like, it's a corporation from a legal perspective, but from a tax filing perspective, we make it easier. And we just say whatever profit there is, it just goes into personal income. Done. And then
that's
they
right.
could take the money out of the bank account. They don't have to worry about like, oh, I have a corporate bank account, a
Yeah,
personal bank
yeah,
account. I can't take the money. We've just made it so complicated. And this way, they won't have to file a T4. They won't have to pay payroll source
yeah.
deductions. Now they'd still have HST, but it's a funny thing. Like, why does even a self-employed individual have to file a separate HST return on the T2125 statement, which is for self-employed
Yeah.
activity, right? There's a thing where you add in the HST number
Oh,
of the
that's right.
business.
Yeah, yeah.
So why don't we, and you actually put in HST collected in the T2025, you write the
Yeah,
HST. So why can't that be the HST return? Why do we have to have a separate HST return, a separate HST payment, and separate HST installments? Because what you're doing is you're just creating more opportunities to mess up and more opportunities to file things late and pay payments late. The more payments you have to make to CRA, the more chances you have of making a late payment and getting a penalty. So
that's
we're
right. That's
basically
right.
penalizing Canadian small business owners. You start a business, you work hard, you're proud of yourself, you're doing all this work. Your potential to get penalties and interest from CRA has just increased exponentially because there's
Yeah,
just too many. You
yeah,
have corporate income tax, you have payroll. And if you want to pay yourself a dividend from your corporation instead of a salary, you still have to file a T5, right? And most small business owners, they can't do that themselves. They need someone to do it for them. They don't understand how the dividend tax credit works. Is it an eligible dividend? Is it a non-eligible dividend? I mean, it's just, they've made it just too complicated. So what I'm saying is, if you're a large business, like let's say you're, I don't know, you're Walmart operating in Canada. Okay, Walmart can afford a big accounting department and a
that's
tax
right. Yeah,
department.
yeah,
But if you're just one guy, like starting a little business, consulting or
yeah, yeah,
whatever it is, an IT guy or an interior designer or a dog walker, or
yeah.
you're a computer repair guy, like whatever, or a plumber, an electrician. We shouldn't make it so we're treating these people as if they're like a large multi-million-dollar business that they could afford a whole accounting and tax department.
Yeah, yeah,
I mean, it's
totally agree.
crazy. And if you just add one employee or even yourself, now you have to calculate CPP and income tax. It's just like, we've just made it too complicated. And that's what I'm just saying. Let's make it simpler, right? And then small business owners don't have to figure out, okay, how do I take money out of the corporation? Do I do a salary? Do I do a dividend? Should I put into the RSP? It just adds a whole layer of complexity, which I think is not really necessary, for most people.
Yeah, and I totally agree. I think that makes sense, particularly given that a lot of these business owners don't even gross more than $500,000, right? For the most
Right.
part, right?
Yeah.
And so it just creates another layer of complexity.
Yeah.
Yeah. So why don't we talk about? So recently, you partnered with I think Steven. Steven is a business partner, I believe.
Yes. Yes.
And you started realtytax.ca.
Mhm.
So why don't you talk a little bit about that? Why did you decide to niche into that area,
Mm.
and who are you serving, and how are you serving your clients?
Yeah, sure. So last year, Stephen approached me. I knew him from before. He's another accountant, a colleague, and I would send him a lot of bookkeeping work. Clients who need monthly bookkeeping and payroll. I didn't like doing that type of work, so I would send it to him. And so we developed a working relationship. And then he started this new firm last year, realtytax.ca, for real estate agents,
Mhm.
because Ontario last year, as of October 1st, 2020, passed legislation. The legislation took effect October 1st last year
That's right.
to allow realtors to incorporate
That's right.
what they call a personal real estate corporation, a PREC. So Stephen started this firm and he brought me in to help him as a partner. Marketing, it's a niche accounting firm just for real estate agents.
Mm-hmm.
to help them, whether they're incorporated or not. We take on realtors who are self-employed, sole proprietor.
Yeah.
We take on realtors who are incorporated with the PREC. We do both, but we only service realtors. So we have a niche, it's a niche firm, and that allows us, the reason why we did that, and it was Steven's idea, and I've always liked this model because the accounting firm I ran for 8 years was very difficult to run because I had clients in every single type of business imaginable. There was
Yeah,
no,
I know. Yeah.
and when you have that, it's very difficult to run and to manage it. And
Yeah, I
um,
agree.
yeah, so but when you specialize in a niche, like, and there's all these kinds of accounting firms out there, like there's an accounting firm for dentists, there's an accounting firm for
Yeah.
doctors, for lawyers, so you have these niche firms. So I thought this was a great idea because all these realtors would be rushing to incorporate,
That's right.
especially those with higher incomes. Um, so we thought this could be a good opportunity to create this niche accounting firm. So realtytax.ca, what we service realtors, and the business model actually is we do both the bookkeeping throughout the year
Okay.
and all the year-end tax work. Because what we found is when we have clients where we do the year-end taxes, but we're not doing the bookkeeping,
I know.
it's a
Yeah.
it's a big mess.
Yeah, yeah.
And
It's always a challenge. That's true.
it's so challenging. Yeah. And sometimes the client has their own bookkeeper or they try to do it themselves. And if they try to do it themselves, that's always the worst because they always mess it up. And then we're spending so much time fixing it. So we realize this business model, the only way it works is we do the bookkeeping every month.
That's right.
It's updated throughout the year. The end of the year, we have the clean set of books. Now we could do the year end and we could do tax planning throughout the year.
Oh,
We
that's
could,
right. That's
because we're
good.
up to date throughout the year. So that's the nice thing about it. So we started it last year and it's growing nicely. And it's really just for realtors.
Oh, that's a
Yeah.
good idea. And so, do they have to pay a monthly subscription, or you have options for payment plan
Yeah, we
with
do
this model?
monthly fees. Every client
Okay.
is set
All
up.
right. Makes
It's
sense.
automatic monthly fees. Yeah. And that way we don't have to worry about, sending invoices and
That's
accounts
right.
receivable, and we just bill it automatically to their credit card every month. Yeah.
Okay, awesome. That's a great model. And
Yeah.
for those that are listening, if you're a real estate if you're a real estate agent or you're thinking about getting into that business, yeah, just check out realtytax.ca
Yeah.
to learn
Thank
more.
you.
So Neil, as we come to the end of this conversation,
Mhm.
what are three actionable steps? I know we've talked about a lot of things today. What do you think are three actionable steps that every Canadian taxpayer should take, should walk away from this conversation? What can they do right away?
I think one thing people should do is actually, this might sound like not such a big deal, but I think it's very helpful. Set up your online, there's CRA My Account for individuals and My Business Account
Yeah,
if you have a corporation or HST, GST, payroll. And it's online. If you just go to Google, type CRA My Account, CRA
yeah,
My Business Account, you'll see the link. Try to set that up because what this allows you to do is you could check your TFSA RSP contribution room.
hmm,
You can access your past 10 years of tax returns, notice of assessments. You could see all your T slips that CRA has on file. You could adjust prior year tax returns. Like there's a lot you could do in there. And it's very helpful. And you could also authorize a representative. So if you have an accountant you're working with, you ask the accountant for their rep ID or
yeah,
and then you could go in and just authorize them, and that makes things easier for them. So that's one thing I would encourage everyone to
yeah,
do. The other thing I would encourage you to do is just try to like have a system where you're organized throughout the year. So if you are the type of person that has a shoebox of receipts and you give that shoebox to your accountant at the end of the year, your accountant's not going to be happy with
yeah,
you.
yeah. That's frustrating.
It's
I
so
tell you that.
frustrating. So what I've used to force my clients to do and what we do in Realty Tax, we tell everyone, invest in a scanner. You could even just download an app on your phone. There's all these apps on your phone you could
That's right.
download.
Yeah,
Genius Scan. There's all these sorts of apps. You just take a picture and have a folder on your computer, tax 2021, and
yeah,
just scan all the documents right there. And at the end of the year, you can just share that folder with your accountant.
yeah,
And then you're done. You're ready to go. Like, and then you also won't forget, like, if you make charitable donations or if you have medical expenses throughout the year and you forget, like I always like yell at my wife because she always forgets to give me her
yeah,
medical receipts. And at
yeah.
the end of the year, I have to chase her like for all these medical receipts. I just tell her, just give it to me throughout the years. I'll scan it in. And at the end of the year, we don't have to worry about it. So
That's right.
those are like little things you could do. I would also, I think it's a good idea to to do, aside from just the little things like that, to kind of have like a long-term financial plan. And this could be whatever age. You could be 20 years old, or you could be 50 years old, or 60 or 70 years old, or 30 or 40. It doesn't really matter. Whatever stage in life you're at, I think you should have some sort of long-term plan. You based on, what's your income, your spouse's income, what are your expenses, and sit down with some sort of financial planner or advisor, or an accountant, or whoever it is, and just see if you're on the right track. What debt do you have? Do you still have, like, nobody really ideally should have any credit card debt. That's the worst kind of debt.
Yeah.
So if you have that, well, create a plan to eliminate it, right? Like, and if you don't have any credit card debt or any other debt aside from a mortgage, then you're in a pretty good position, right? So,
Yeah.
but have a plan. Like, are you investing in TFSAs and RSPs? Are you doing that? So that should be you should look at your whole kind of financial situation, come up with a long-term plan. What is your retirement plan? Do you have a plan for retirement? Do you know what age
Yeah.
maybe you want to retire at? And it's never too early to start thinking about that and planning that and setting a little bit of money aside every month from each paycheck. There's a great book, The Wealthy Barber. It was written many years ago, but
Yeah, it's a good book.
he wrote a sequel called The Wealthy Barber Returns.
Yeah.
And I would encourage everyone to read this book, especially people who want to learn more about just personal finance,
Yeah.
and wealth building. I think it's a great start. And there's a lot of other books out there on the subject as well, where you could educate yourself. And there's a ton of blogs out there online and podcasts you can listen to about this topic. But I think those are that's kind of where I would start. Like, if you don't
Yeah.
really know even where to start, right?
Yeah, thank you. I think those are really, really great tips. First try to set up your account to CRA, because I get calls all the time from clients. Oh, what's my TFSA limit? What's my
Yeah.
tax refund? What's this? Can I get a copy of my tax return? And a lot of this information you can
Yeah.
get from your CRA account.
Right.
And I think whether you have an accountant or not, whether you file your taxes yourself or not, is always a great idea to have that account set up so that you can have all of that information right on your fingertips. And I think I also like your idea of staying organized. Sometimes as accountant, even as an accountant, I'm guilty of that sometimes. And so I always recommend all these tools, whether it's the tool to track your mileage, put it on your app, on your phone, tools to do your bookkeeping. QuickBooks has the app where you can always scan all your receipts as well.
QuickBooks Online.
QuickBooks Online on your phone. So those
Yeah.
are really, really good tips. And I think thinking long term, I totally agree with you. Everything I do, I always encourage people have a 10-year plan, 5-year plan ahead of time, because that's the only way you can get ahead.
Yeah.
Otherwise, you're just gonna be in this. You're just struggling every day, this rat race, where you're trying to catch up.
Yeah.
So thank you so much for those tips. I think those are really, really great tips. So Neal, I think there are lots of people that are going to be feeling inspired and motivated because of what we've discussed today. And so where can people reach you if they want to find you, if they want to follow you?
Sure.
What's the best way to get a hold of you?
Yeah. So my website, well, if you're a realtor looking for tax services, the website is realtytax.ca, REALTY tax.ca.
Yeah.
And the Grumpy Accountant, you could visit grumpyaccountant.ca. And the book is available on amazon.ca. It's available on indigo.ca. And the ebook and audiobook are available everywhere. I actually narrated the audiobook myself. So if you want to hear me rant for like 5.5 hours, you can download the audiobook. And you can get in touch with me, Neal at realtytax.ca or Neal at grumpyaccountant.ca. I check both emails. And I'm on, I'm on Twitter. You can search Grumpy Accountant. I'm on Instagram, the Grumpy Accountant. And for realtors, we actually do have a Facebook group, a private Facebook group called Tax Tips for Real Estate Agents. And you could feel free to join that group if you're a realtor. So lots of ways to get in touch.
Okay, awesome, awesome. All right, thank you so much, Neil, for your time today. I really appreciate it. And those that are listening, make sure you grab a copy of the book. It's a really, really great read. And I love the way you simplified our complex tax system
Yeah.
in this book using stories. So thank you so much. I appreciate your time, and we'll certainly stay in touch.
Thank you very much. I really appreciate
Okay.
it also.